Great to see all of you here again. Welcome to our monthly webinar. A special mention to BitAngels. The BitAngels network globally is one of the earliest Bitcoin and cryptocurrency VC and angel networks, and it has been around for very, very long. The co-founder, Michael Turpin, um, was speaking with me, and I agreed to run it in Singapore. And we have run a few successful webinars thus far. So as the world is starting to open up again, then the BitAngels network is also connected with Coin Agenda, which is right now starting. I think the first live Coin Agenda this year is going to be hosted at Monaco in very short order, maybe this month or within the next few months, right? So those who are interested in the live events, you can always reach out to BitAngels as well. Um, so thanks very much for the kind introduction, Nico. Let me share my screen now, and I'll launch into a short description of where we are in terms of market adoption of crypto and what I see in the future. Okay, so great. As we know, and we have in the room one of the co-founders of Dash Nix, so they are supporting the Dash network, Felix. So this was 2017, a snapshot on 17th of December 2017. So as we know, Bitcoin is still around, Ethereum is still around in the top two positions. Bitcoin Cash is nowhere in the top 10 anymore. I think they have been pressed down. XRP, for a brief moment, was number one. They briefly overtook Bitcoin in January 2018. And right now they have fallen down a bit. You can compare, let's say, the top five, right? Bitcoin, Ethereum, Bitcoin Cash, XRP, Litecoin. And this is 30th June, which is yesterday. Bitcoin, Ethereum are still there. Let's see, where's XRP? XRP is number 7. Litecoin is number 13. And Bitcoin Cash is number 12, right? So they've fallen down a bit. Okay, why am I showing this? Because I want to describe about the market adoption of coins and how they impact the market valuation and adoption rates. Number 6, Cardano is still around, still going strong. Number 5 now, they've climbed the position. And if you look at Bitcoin Gold, that has disappeared. Monero, I think, is much further down. Dash has fallen to maybe in the 30s to 40s. IOTA is no longer anywhere in the top 10 to 15. IOTA, I think, has fallen into somewhere nearer to top 50. NEM has fallen off the map as well. A lot of politics and problems with the organization, and I think the product rollout wasn't fantastic. So they've had multiple leadership changes and some exits from their early founders and co-founders, etc. So that caused a lot of problems. Bitcoin Gold is nowhere around again. I think it should be maybe top 100 or top 200. I'm not sure. Stellar is still quite popular nowadays, but it's no longer in the top 15. EOS was number 13 back then, and EOS is still probably in the top 20 to 30, right? But not so much adoption. NEO has fallen off as well, I think in the 30s to 50s. Ethereum Classic is also has also faced the same problem. Okay, why is this relevant? Because many of these are protocols, right? Basically all of these are protocols. Yep, all of them are protocols. And today we see some of them which are not protocols, but more ecosystem and platform plays. More, instead of layer 1 technologies, they are more like layer 3 technologies, or some are layer 2. Okay, so layer 1 are the foundational pieces, the languages, the protocols like Ethereum, like Bitcoin. And layer 2 are forks of the main chains, and they are called side chains or child chains. And so they have their own environment using the main layer 1 technologies. And then layer 3 are the application layers. So today we see that over the last 4 years, things have matured. So for example, I'd like to draw attention to number 15, Chainlink. For a brief moment, Chainlink, I think, was in the top 5 to 6. Chainlink was a 2017 project, and today they have checked a lot of their roadmap items, and they have vaulted up into the top 15, and they are worth several billion in terms of market cap right now. What is Chainlink? Chainlink is basically an Oracle protocol. As in the finance industry, many things are required to be regulated, and information feeds which are reliable are very important. So that's what Chainlink allows. Chainlink is a protocol that allows Oracle information, meaning real verified information from multiple sources. So that's very important for the financial ecosystem. And of course, with the nascent cryptocurrency industry, that's also very important. So this is how Chainlink being an application has actually moved up into the food chain. Binance has grown from strength to strength. They launched in September 2017 with I think 15 to 20 million market cap, and today they are 44 billion, as you can see, right? So they have grown huge, and they are just a protocol, right? They basically forked the Ethereum mainnet and then created their own BNB coins, and later on they have also created the Binance Smart Chain. So it's a very smart ecosystem play by Binance, but this is something that you don't even see in 2017. There were no platform plays here. Binance is basically an exchange that has done well, and then grown their ecosystem around it. Dogecoin is interesting. That's purely based on Elon Musk and his tweets, but let's not go there. The others here, Uniswap. Uniswap is also an exchange play. Very interesting. Number 10 today. Uniswap was a project that started in 2018, and it has shown market adoption. It's now at version 3. So this is another successful model of a project that has checked the boxes and delivered and has grown the value. So back in 2017, 2018, DeFi, DEXs, or decentralized exchanges were not really doing well. Of course, a few of them raised tremendous amounts of money, like Kyber Network. They raised inordinate amounts of Ether. But they haven't really shown much progress, whereas Uniswap was able to draw in a lot of the DeFi crowd into usage of its ecosystem. And now it's one of the top exchanges with the top liquidity available. So that's another example of a project that has gone good, meaning they have provided value, checked the boxes, and delivered on its promises, and therefore they have achieved a good market positioning today. So I don't have so much time, maybe another 5 to 10 minutes. So let me just describe about what are all the industry applications that I'm talking about. So typically, so this is very basic, right? All of you who are experts, this is nothing to you. So basically, for a blockchain, it's a decentralized ledger. So some variously call it DLT, distributed ledger technology. And it's essentially a decentralized ledger. So blockchain has solved the problem of double spending, and that's a very, very important thing because it allows triple accounting, meaning everyone can maintain the same ledger and update the information at the same time, which prevents cheating, right? So it's a very secure way of transactions records. So how this happens is when someone requests a transaction, it then goes into the entire network. Then all the nodes will validate it, and then the verified transaction comes back to create a new block of data, and the blockchain has updated. So that's essentially the meaning of blockchain, right? So a lot of people don't understand this and just use the word blockchain, but it's all right. You don't really need to know the ins and outs. This is basically what happens. And some of the industry that blockchain and cryptocurrency have been useful in some of these, right? Essentially, finance is always the biggest thing, and that's why DeFi is so interesting right now. Because as with any kind of new technology, any kind of new industry, people always want to adopt. The early adopters want to get rich quick, right? So that's the primary consideration. And in order to get rich quick, it has to touch on money. So finance and the financial ecosystem is one of the first things that cryptocurrency has impacted. And you can see Mark Cuban recently announcing that the banks, the real world giants right now who are dominating centralized finance, have to watch out for decentralized finance. He himself says that he's supporting one of the protocols with his own liquidity, providing lending, providing decentralized finance facilities through technology. So that's what the finance system is looking at. All right, there are massive disruptions that are coming about and that have already occurred and will be occurring in the future. Right, there might be hybrid models, there might be decentralized models that will replace some of the centralized finance models that you see in the world today. For example, if you are using Aave or say compound finance, you can put your liquidity, that means your money. For example, you can change your Singapore dollars or your US dollars into, let's say, a stable coin like USDC, right? Which is supported by Circle and Goldman Sachs. Once you put a USDC into a Aave or a compound, you can then lend it to somebody who wants to borrow it. So it's as simple as someone with some kind of collateral like Ether or Bitcoin, putting it into Aave, and then you providing the liquidity, which is your USDC, and they can borrow your USDC and collateralize it by putting in, locking into a smart contract their Bitcoin or Ethereum. So if the market prices drop or if they default, then you can just take the money from them, the assets which they have put in as collateral, and convert it, and then you get your money back. So this is fantastic, right? This is basically lending without needing any kind of intermediary. So this is why the financial services have been disrupted massively. DeFi has now achieved over 100 billion market cap over the last 4 years. In 2017, the first projects just started. And at the end of 2017, the total value locked, that means the total asset value in the DeFi ecosystem, decentralized finance ecosystem, was only $30 million. Now it's variously, different sites of course have different metrics, but some sites say that there's over $100 billion locked in. Within a short span of 4 years, it has gone up many times. So this is a huge market potential for financial services. In automotive, that's very interesting as well. Why do the car manufacturers want to use blockchain, right? But Tesla got into it, and they are actually accepting cryptocurrency for payments. But this is a very low level usage. This is as good as saying, okay, I take your digital asset instead of taking your fiat currency. But what's even more interesting in the automotive industry is that cryptocurrency can be used in the supply chain. So, for example, instead of the traditional ERP systems, the enterprise resource planning systems like SAP or Oracle, you can actually design a system using cryptocurrencies and enable distribution and supply chain enablement using cryptocurrencies. Meaning you cut out all the middlemen and the administrative processes, and then the smart contract, which is locked into the system, can execute all these without flaws. Right, so this is fantastic for supply chain kinds of technologies of industries. Voting rights, that's something interesting as well. Over the last 4 years, many projects have been coming out to the market. Nothing has really grown to dominate the market yet, but some government votes, some municipal votes have actually been conducted through DLT and cryptocurrency blockchain transactions, because it's immutable and you can't cheat. Right, so this is something which may be coming up very soon in multiple countries. Voting rights is a governance structure that allows people to use the blockchain technologies and cryptocurrencies to do their voting. Governance structures and voting rights is also very important in the DAO systems. So one of our speakers here, Felix, is a big proponent of the DAOs. Later you'll hear from him. DAOs are decentralized autonomous organizations, meaning that it's a company that belongs to everyone and no one. Right? So it's something like Bitcoin. If you have Bitcoin in your wallet, you are actually part of the whole Bitcoin ecosystem, but you don't own anything in Bitcoin, right? You don't own any shares, you don't have any equity. You are one part of the huge network that is operating it. But more advanced decentralized autonomous organizations, more advanced DAOs actually allow you to vote, meaning that some of the cryptocurrencies that you hold, if you lock it into the voting pools, will enable you to cast your votes to decide the direction of the project. So that's something very interesting. And I'm sure a lot of you are football fans. Right now, there are two major events happening, Euro 2020 and the Copa America. So imagine you can influence the running of your team, right? There are actually some apps, some projects that have come up over the last 3 to 4 years that enables that. For example, the Chili's project with their socials app. If you own some of the cryptocurrency there, you can actually influence how your team makes decisions. So that's something that is very interesting for the voting rights industry. And healthcare. We have worked on several projects over the last few years in the healthcare industry. Healthcare is a very good use for this. Imagine if any of you have been hospitalized before. It doesn't matter whether it's a major or minor issue. Once you go in, the doctors and the nurses will ask you, what's your medical records, and then they will tell you, okay, you have to do this test, do that test, and then after they take your blood and run you through all the machines, and you pay a few $1,000s, then they'll tell you, oh, then you're okay, right? So every hospital that you go to, you have to do that because they don't have your records. So imagine that you have all your personal data in your cryptocurrency or in your system, right? With that, any kind of network that plugs into your information will be able to retrieve it. And you can hold your private key, meaning that you hold the keys to your data and you can enable it only when you choose to. So this is a huge use case for the healthcare industry. And in fact, when you own your own data, some medical research laboratories will also want to use your data, and you can actually monetize your own patient data. So in the fields of EMR, EHS, EMS, electronic medical systems, personal health records, right? There are so many acronyms, but they all mean the same thing. Basically, patient data, which is extremely important, so that you don't have to go through multiple tests, so that you can share your data in emergency situations and you still retain the control of your data. So this is a huge use case, and across the medical industry, it's not just your data that's important, your personal health records are important, but also your data that you can lend to the insurance agencies, to the medical records, labs, and for them to do additional tests so that they can improve on the medical system and to come up with more drugs or more medicine that can help the whole world. Right, so all these are important applications in the medical industry, in the healthcare industry. So basically, there are so many different applications. These are just 4 that we have chosen to describe about briefly, but this already shows you all the opportunities that are out there. One of the interesting applications that I've seen, unfortunately, they are not in the top 15 anymore, is Tether, or Tether, Tether.tv. It's actually a blockchain-enabled kind of a Netflix, right, or a Hulu. So that's something that is that's a real life application, and the more people that adopt it, I think the more valuable that ecosystem will be. Because now, after 3 to 4 years, 5 years of all these applications having started back in 2016, 2017, 2018, we are seeing that the ones that have checked out all the things that they say are on their roadmap for development are the ones that are dominating the industry right now. So blockchain has a great impact on many areas of industry. I've described automotive, financials, financial services, healthcare. Of course, supply chain is one part of the automotive industry as well. Real estate, that's something interesting. For example, we are looking at resort island off Bali right now that's tokenizing. So they are actually using NFTs as a yield boost and to give returns which are additional to the investors. So this is already an advanced usage of tokens, both NFTs, non-fungible tokens, which have burst onto the popular consciousness this year, as well as fungible tokens, which are the normal utility tokens that you are using. So in the energy industry, integration with blockchain will also enable them to improve their sustainability and reduce their carbon footprint, because the usage and adoption of digital assets and technology will actually cut down a lot of energy usage. So we have all seen that there's a recent hoo-ha about the environmentally unfriendly Bitcoin mining, right? But actually, that's not really true, because if you just imagine, for me to send a Bitcoin transaction from, say, Singapore to New York, I just need to press a button. Of course, miners would need to do the mining, and then the money gets sent. But if I wanted to do it through a traditional banking system, I would have to log on to my digital internet banking system and then give the TT instruction, the telegraphic transfer instruction, and then my bank will then interact with a correspondent bank or intermediate bank, and then this intermediate bank or correspondent bank would then send the SWIFT transaction to the final destination bank, and the final destination bank needs to check with the customer receiving it. So along this line, multiple people will be doing work. So the carbon footprint of someone actually doing of this actual transaction going through a traditional banking system is much higher than the Bitcoin cost in terms of mining. So this is often something that the environmentalists or the people who don't understand cryptocurrency and digital assets will argue, but it's a very simple, it's a no-brainer to anyone who understands cryptocurrencies and the digital assets industry. So I'll leave you with this. I won't go through this. This is something that I can talk about for hours, but just a very quick overview about market adoption, the different sectors that can use blockchain and cryptocurrencies, and what we are seeing today being the result of these things that have actually come into actual usage in the industry, right? And of course, all of you who are looking for bargains, who are interesting, there are interesting coins that are coming up, look for real market adoption, because that's the one major factor that will show the value of the cryptocurrency that you're looking at. All right, thank you, everyone.
I started with BitAngels in 2013, and that was like before Ethereum, and it's been really fun. And we've had a great time doing virtual sessions. So I want to thank everyone for joining and hope you're all healthy and happy. I'm just going to talk a little bit about Ethereum 2.0, like maybe a little bit more technical, but just about what we could expect with Ethereum 2.0 and the rest of the industry. So let me just get into this. So what is DeFi about? These are the guys in the suits from Wall Street and such. This was from a CoinDesk article, and they make a lot of the money. When you transfer money, when you put your money in the bank, you get 0.5% or something in the United States. They're getting like 8% on that money. They're loaning it out to other customers, and DeFi gets rid of the middlemen. So unfortunately, like, these people are becoming less relevant. They're going to have to adapt, and it doesn't mean they can't make money, but they might actually have to invest and put money into the DeFi market. So if you're wondering where the money comes from for DeFi, a lot of it comes from the fact that you don't need these middlemen. I think everybody shows these charts, but basically, obviously DeFi, so the total value locked is the amount of money that is in the system that is going to be used for liquidity or some kind of operation. Has dramatically increased and is going to continue to increase as more people learn about it. I think DeFi is a little difficult to understand: farming, staking, swapping, all of these things. So this is going to become easier. So really, the reason this isn't higher is because it's a learning curve. So how does DeFi work? It works because it's distributed, decentralized fees. Every operation charges a fee. When you swap, you pay a small fee. So if you exchange between Ethereum and Chainlink, you pay like a 0.3% fee. Well, some of that goes to the individual people providing that liquidity, aka like the people that are there putting their money to work get some of those fees. So it's a fee system. I'm sure there's some feeless things, but we take fees, and instead of being a middleman, we distribute it. So what are the benefits to like an average user? I mentioned El Salvador because July 7th, they're going to be incorporating Bitcoin as a legal tender. Well, that also means Ethereum and other crypto is going to be coming like on the radar, right? Well, they can earn interest on their savings. So they may have $100 or whatever is relative to their area. Without middlemen, they can put that Ethereum or possibly Bitcoin in one of the Bitcoin layer 2 apps and get 10%, right? And they can quickly do currency conversion. So if there's a demand to go from Bitcoin to pesos or to dollars or to whatever they need, they can do that without really having to leave the cryptocurrency realm. Obviously, there's some issues. Bitcoin and Ethereum are separate chains. So, I mean, if I were to sell this to a friend, I'd say, look, you can take two stable coins. You can take US dollars, USDC, and you could take US dollars USDT, and you can get like up to 10% for doing nothing. And they said, how does that work? I said, because you're the bank. right? So I think for just a holder, somebody who's got cash, this is like a really, really real value proposition. Although there are risks, it's very low if you're doing 2 stable coins. So that's how I would sell it to my mom or something like this. I should close this. So in terms of Ethereum 2.0, Ethereum 1.0 pretty much has the market share, the large market share of DeFi, and it's about 2,000 to 3,000 transactions per second. Now it's said that the 2.0, which is an upgrade, is going to be about 100,000, but that's kind of like, it's it's an estimate, and I don't think it's proven, but it's going to be a lot more. It's proof of stake, which basically means that they really couldn't achieve this speed increase without getting rid of the proof of work mining. Now that shifts the narrative away from like environmental things and basically says, with proof of stake, just regular computers are ensuring the security of the blockchain. And there's about 5.9 million ETH dedicated to ETH 2.0. So that is an obvious investment into what the future is. I'm not going to do that calculation. Sorry, I got a Telegram here. Let me just, that's fine. So what is layer 2 for Ethereum, right? We have CeFi, which is the term for centralized finance, like exchanges, which you have like Binance and stuff that are scalable, right? Because they're centralized. You have proof of stake systems, basically, which is Matic and Binance Smart Chain. And then you have what's called rollups, which is one of those products is Optimism. They recently raised like 300 million or something, and there's just a lot of excitement around Optimism. So let me just quit Telegram really quick. All right. So hopefully I'm giving you a little more technical detail than you need. But these are the 3 layer 2s for Ethereum. Is the CeFi exchange, proof of stake, which is basically what Ethereum is, but a lot more centralized, and it's fast, and rollups. We'll talk about that. So Optimism is kind of the leading rollups technology. Now, what does rollups mean? A rollup means you take a large number of transactions. So you're on layer 2, and let's say you have 1,000 transactions. You can package it together nicely and submit it to Ethereum. And in that way, you can get a lot more scalability. You can roll up. You can basically just take a lot of data and roll it together, sign it, and then Ethereum will accept it. Well, if you don't understand that, that's fine. You can go to their website, optimism.io. One of the cool things about their project is they don't have a token. So you can't buy a token. But projects like Uniswap and Synthetics Exchange have already said they're going to use Optimism, which is a big deal. And one of the benefits of Optimism is that you can actually integrate between Ethereum and on the Optimism platform. So you don't have to have 2 separate things running. So I would just say, if this is a little beyond you, check out optimism.io. I kind of think this is a leader for Ethereum because basically from a programmer standpoint, it's quite easy. It makes it very nice. So Uniswap, big, I would follow that versus Matic or other ones. So I say here, why rollups allows layer 1 Ethereum apps to communicate with the layer 1 blockchain. And basically the other thing, it can detect state changes. So if something changes on Ethereum, it can change on the rollup chain. So a simple way to say it is it's a really, really elegant way to add scalability to an Ethereum app. So some of the other things that you might want to note is, in terms of DeFi, there have been some new token models. That's what I call them. So DeFi tokens, it's a smart contract. So you're not limited when you create your token to what you can do with it, right? So you could have a DeFi token that, say, every time someone sends it, there's a 1% fee, or it adjusts, or there's what's called a burn. So what I would be weary of and also aware of are these built-in functions into a token, where you can essentially make it a smart token, where it performs some operation. I'm not going to get into it too much, but here, let's get to the important part. Rugged. Rugged is a term where you put your money into a DeFi app and you lost it all. You don't want to do that. How do you not do that? You really want to see that, if it's too good to be true, it probably is. If it's brand new, it's probably not worth it unless you're putting 1% or 5% or whatever in. So you got to look at like the Uniswaps, the audited projects, the projects that have really, really good communities, and the developers have been out there and it's been used. Because I guarantee you, if you're new, eventually this would happen. It's not happened to me, but I've missed on a lot of opportunities. Like someone will say, hey, buy this coin early, and I don't. But one of the other ones ended up getting quote unquote rugged, which is pulling the rug out from under you. So what I say is the industry needs to come together and form a council or group, and there needs to be sort of like a gold standard, because users can't understand solidity. When you can look under the hood of any of these apps, but they can add small things and you're screwed. You lose your money. So I would say in the future there'll probably be more of a industry group for DeFi, just like there are banking groups and other things, so people can know what to use. But yeah. So what are the DeFi killer apps? They're very simple, layer one, and this is what I see continuing: loans, savings, exchange, decentralized trading, cross-chain token support, insurance, and integration of DAOs. DAOs are basically ways for users to vote. So Uniswap has a token that is virtually useless, except for the fact that you can vote on how Uniswap will change. So that means that, the people that actually own the liquidity and are part of the bank can vote and decide what they want to change on the protocol, which is huge. Imagine you had a bank account and the bank said, hey, you get one vote into how we're going to change our model. This is one of the other biggest things about DeFi is you have a voice. And I know I've got a lot of content here. There is DeFi starting on Bitcoin. I really love Bitcoin, so don't forget about it. There's Rootstock is launching layer 2 Bitcoin apps, and also Lightning, which is free instant sending, is enabling a lot of use cases for Bitcoin. Some DeFi tokens that you could invest in, so you don't have to use DeFi to make money on it. Coinbase has a number of tokens, other exchanges. These are like the biggest ones, but Uniswap, Aave, QuickSwap, Comp. I'm just listing a few to say, if you want to take advantage of the DeFi opportunity, how do I make money? You're going to look at a project that has a lot of users, that has growth, and you can go ahead and pick one, just like a stock. And simple as that. If it grows, it grows. That's it. You don't even really have to do anything. A lot of these have already gone really, really high, but yeah, I mean, they're all pretty clear picks. Other notable protocols, as people have mentioned, is Solana, ICP, Algorand, ADA. These are some other chains and products that that I find interesting. There's other things, but yeah, there is competition. But I'm happy, and I'm sorry to say, I think if they actually get Ethereum 2.0, we pretty much we'll go that direction with something like Optimism. So anyways, I know that was a lot of content.
My name is Felix. I'm from, I wouldn't say a company, but a decentralized organization called Dash. We are one of the rather OGs out in the crypto space. We started 2014 with actually a simple value proposition. We want to be the digital cash of the world. That means we are creating actually a payment system, that does one thing very good, which is payment. And I mean, we're in crypto for over a decade now, and started off with Bitcoin, saying, hey, Bitcoin's going to be the new money, everybody's going to pay in Bitcoin, just to realize it's not scalable enough as of now. And it's actually very painful to pay with Bitcoin. It's not only expensive because you pay very high fees, you also wait very long until you have a confirmation, right? That ends up in a situation where if I go to a coffee shop and want to pay in Bitcoin and pay Bitcoin over the Bitcoin network, I can sometimes pay up to $50 fee for my coffee. And I might wait for 1 hour to 3 days until the barista has the confirmation of my payment. So this is not really useful. And this is why we are focusing on a payment system that is really almost instant, that is all around the world. All around the world. That said, I said I'm working for a decentralized organization. In fact, I'm the co-founder of what you see here on the right side, Dash Next, and some local entities here around Asia. Dash is a organization that is not an organization in a traditional sense. That means we do not have a CEO, we do not have a corporate entity that is, somewhere registered in the world. We are code running in the internet, and we are that code that enables sending Dash from A to B in a very efficient and awesome manner. So this is one part. The second part is Dash, essentially like other blockchains, to put it very simple, we are generating money as we go. Every block there is some coins generated, and Dash is distributing that coins in a very unique way. That means part of that money that is or part of this Dash that is generated is distributed to people who apply for it in, let's say, an internet forum looking thing, where people like me can come in and say, hey, I'm here in Asia, I want to build a crypto payment ecosystems for Dash in Asia. I'm pitching for part of that money, and my deliverables are 1, 2, 3. I'm connecting partners, I'm making marketing, I'm onboarding new clients. I'm here to grow the ecosystem. And like me, everybody can apply and everybody can be part of that organization. So if you just, let that sink for a moment, what does that mean? It's actually very radical in terms of how you run organizations. I mean, usually you have an entity, you have a registered office, you are somewhere. And if somebody wants to work with you, they apply, somebody will read your application, and then there is a rather opaque selection process of saying you can work with us or you cannot work with us. We don't have that. So everybody can join, and I encourage you to check out something like Dash Nexus. There you can see all these proposals that people put. And if you want to engage, please feel free to approach me. We are a rather open bunch and a rather friendly bunch to talk to. So please feel free to engage. I said we are building payment ecosystems. So of course, it's important that we are, that we really do that, and that you can pay stuff with Dash. Obviously, retail, online, offline is the first thing you do when you want to do payment. But you go industry by industry, and payment is everywhere. That's the good thing about it. But the technology stacks that are behind different areas, industries, they differ very much. Also on depending where you are, payment is not always payment, and payment traditions are not only payment, are not the same everywhere. For example, here in Asia, everybody is used to paying with QR codes. If you try that in good old Europe, especially in the German-speaking countries, good luck with that. You most likely end up going to an ATM and getting some cash to pay your bills, because nothing else is accepted. So that's a classic situation you're running into. Okay, but actually I'm here to talk about DeFi. And I said before already, DeFi is here to stay, in my opinion. It's no question anymore for me if it's going to stay, but how and when we're going to outpace and the traditional financial systems, and when we are here to replace banks. For me, as you can now automate everything, and I just showed you Dash has already shown that you can run a completely decentralized organization for now over 7 years. So there is stuff that you can do, and there's completely new things that you can do. For all of you who are maybe a bit new into DeFi, I think the easy way to approach it, what it actually is just looking at the financial system and just looking at how, what are the most basic building blocks that we have nowadays in the financial system that are, you know, on the one hand, there's a lot of money that is exchanged from A to B. Probably the largest market in the world are the Forex markets, where people trade currencies, pounds to euro, Singapore dollar to dollar, or whatever it is, right? There's huge volumes. There's a lot of people who are doing that every day. On the other hand, the whole financial system is very reliant on borrowing and lending markets, meaning I can go to the bank, I can ask for a loan. They, you know, have a selection process if they want to give it to me or not. And of course, everything that is yield generating, meaning all that financial products that the financial system is very creative in inventing. It's not only, you know, stock markets, or I can speculate with currencies, but there's rather crazy stuff like CFDs or options in all kinds of forms, synthetics. You know, there's a lot of financial products. And if you look at it from this perspective, actually you can say now, okay, let's reinvent not the wheel, but let's reinvent these kind of products, but in a way that we don't need a bank to issue them, and in a way that we don't need any middleman to issue them. Now, everybody, and I just read the story of a 13-year-old boy that created a new a massive DeFi product. Everybody can just create something, can release it to the internet, and can bring in people. To put it a bit in perspective, what has happened, total value locked is probably the most important reference point of how DeFi, how the state of DeFi is currently looking. And total value locked means how much money did people put into these protocols. So everybody can create a financial product, can release it on the blockchain, to put it very, very simple, and then people can start to put in money, right? And obviously, the more money is in that whole systems, the more importance DeFi has. And you know, we have seen a crazy increase in the last year. And in fact, it has started somewhat mid of last year. I would say beginning of last year was like when people started talking about DeFi, and we were talking about, you know, there was like maybe $500 million in all these protocols together. And that went up to almost $90 billion before the market took a little dip. And as you can see, you know, price, okay, it went down, but it already stabilized back. And, you know, this is what we are seeing on Ethereum only. There's currently, I just took that screenshot, almost $55 billion. In the big, you know, picture of things, obviously that's not much if we compare it to all the financial system, but a number is growing, and I'm sure this is exactly how we can see this space is growing. And it's very important to note that this is only Ethereum, and what is happening right now is that there are many different blockchains, such as Binance Smart Chain, or second layer solutions such as Matic, where people essentially have all these financial products, or on different blockchain, you have a selection of all these things I just showed you: lending protocols, yield generating protocols, or exchanges. So you can essentially do more or less the same on different blockchains. And this is why different blockchains have different TVL. And I mean, to get the whole market, essentially you have to add all these different TVLs, and then you have the numbers. So we see the big dog in the room is still Ethereum, but it has, you know, dipped a little bit. The upcoming rising star is Binance Smart Chain. We were at almost $60 billion and now at 24. So we lost quite a bit, but it seems we are stabilizing. There was a short period in May where we thought, oh, okay, maybe Binance Smart Chain is even overtaking Ethereum now, but it didn't happen yet. Binance Smart Chain has a couple of good advantages. Number one, it's much cheaper than Ethereum. And number two, it's not that congested, so it's a bit faster. And number three, and I think this is a massive one, Binance has a lot of users. So what they did was basically creating a button on their on the exchange, on Binance exchange. If you press withdraw, you have for many assets, you have the option to withdraw it to Binance Smart Chain, and that makes things very, very easy. Just, you know, to go back and forth from Binance to Binance Smart Chain and do certain things on it. But long story short, TVLs are very important. TVLs, of course, in a market crash take a hit, but I'm not seeing it, going away. It's going along the market, and from what I see, actually, the market went down much more than the TVL in these products, which is also the reason that you have a lot of stable coins in these products, and people are farming with stable coins. Because one thing that is always happening when the market goes down is that people change from holding volatile crypto assets to going back to stable coins. In contrast to that, what is rather less happening is that people are exchanging back to fiat money because it's just more expensive, and it has tax implications and all that. If you look into these protocols, and these are the top 10 you see here on Ethereum, you see it's exactly these things I just showed you. Lending protocols, DEXs, decentralized exchanges, meaning exchanges where you can swap something from A to B. And obviously, everything what you see here in assets is essentially yield generating products. So these are kind of the main things that make the top 10 of crypto products right now. I have just 10-15 minutes, so I don't want to go too much into detail of what these are. Number one, they all look very nerdy, which makes me very, very happy to see that. It's all has this touch and feel of a late 90s computer game. So that's one reason why you should try it. Obviously, the other reason is it's really a different story if you take a look into it. And most likely you will come into a situation where you go the first time on one of these web pages and say, hey, what the hell is that? And then you start thinking, and I can highly suggest to open YouTube and to check it out, how it works, and to just try it out. Because once you try it out, you will have a completely different understanding of how that works. On Binance Smart Chain, it's looking a bit similar. We also have kind of these protocols here, a bit more yield generating products on the top 10 than on Ethereum. Nonetheless, market cap of these tokens is crazy, and the TVL, the money that is locked in these protocols, are very, very high. To almost wrap it up, a couple of thoughts, and maybe I can show you as well some of the protocols on my screen. I think one important thing is if you see these products and you see high TVLs, this is one feedback I regularly get. People think like, come on, it's crazy. That is a joke. How can that be real, right? I can highly suggest you to look into these business models. And what is happening right now is that people really have the freedom to reinvent the financial industry with whole new fee structures, with whole new business model on the one side. And on the other side, and my previous speakers already went to talk a bit about that, you have a token that is kind of a secondary model to do things with, right? I just heard the example of Uniswap that is just, it's a governance token that doesn't do much. Yeah, that's true. But, the team of Uniswap already has a lot of Uniswap tokens, and there's a lot of money to be made, right, for people who can play this game. It doesn't have to be part of the business. It can be part of the business. What I'm saying is there's a million ways to do it, and it's really important to to sit down and to plan it properly, because only then you're able to find that business model for the use case you have, be it the lending protocol, be it the DEX, whatever it is that kind of makes sense for you. My previous speakers also said that, watch out for scams. Of course, if you have unregulated financial products, and we have seen that, with penny stocks or many other examples in history, there will be scams, and there will be people who don't have your best interests, which is kind of normal. And yeah, if it's too good to be true, it's probably not true. Right now, we're in a situation where that doesn't matter too much, I feel, and people are throwing money to whatever it is because they think, okay, I'm not the one, I will be out already. But I mean, watch out, there's obvious scams, and this is one thing I'm not sure how that will evolve, but there will be standards, and there will be stuff that how we can make things better. I mean, it's very difficult to say it's a scam or it's not a scam, and it's very difficult to vet code. I mean, we have seen rug pulls even for protocols and products that were that were properly vetted by third-party companies and code audits and even multiple code audits. But if you copy paste and remix the original, then there things can go wrong, right? And if one thing go wrong, that probably many who build on the same protocol or on the same codes have an issue. Last thing, I already said, if you want to understand DeFi, you have to try it. I think there's no way around it. And I personally was reading about DeFi for 3 to 6 months, somewhat at the beginning of last year, and just didn't sit down and took the 3 hours to understand it. I wish I had done it before. And I think you need like 3 to 6 hours to really do it. Allow me. I think you don't see my screen anymore. Hold on 1 second. Okay, the last thing I want to show you. Sorry, here it is. So this is PancakeSwap, and if you never have tried it, try it. It's very easy. You can go here to trade. You can go to exchange. And same as on a centralized exchange like Binance, you can just swap one asset to another. In this case, you can do BNB. You say, I want to change my BNB to USDT. You enter the amount and it will immediately quote you a price, and it will say, here is the slippage tolerance. Probably my internet is a bit laggy. Okay, so 1 BNB currently $294. In the background of this, and this is why I was talking about the business models, there is liquidity, right? So if I want to trade BNB versus USDT, somebody has to put in USDT and BNB into the system, essentially, right? And in order to do that, everybody can put liquidity, right? But to understand now what it does on the business model side is, if I'm exchanged like Binance, I let people put in orders on both sides, on the sell and on the buy side, and I earn the fee, whatever happens as the exchange. In this case, with Uniswap, there is a fee generated, but this fee goes to everybody who is providing liquidity here, right? So in this sense, you have a business model that suddenly incentivizes your users to come in there. The same goes for, all these yield farming products, right? This is Auto Farm, one of the very famous. You can see here, you put in assets, you stake them, or you stake pairs, which are liquidity pools. I don't want to go into that, but let's say you stake an asset here. I can stake that. I get 18%, or I go in and want to stake my belt ease for 9.8%. I can go here, and here I see, there is a fee model. So, and if you look at that, suddenly it's not just somebody gives me money out of nothing. No, here's a business model, and if somebody puts money here, they pay a fee, and if there is money generated or interest rate generated, there is another fee to be paid, right? So it's the small print that matters, and it's the small print where you, as a company who is doing something like that, can create their business model. So this is actually, I can talk hours more for that. I'm a bit over time already. So thank you very much, and I'm happy to take your questions.
Thank you so much, Mr. Felix. So basically, right before we end this session, there's a question that as someone is asking, can you go through your application or use cases of DAOs in the work you've done?
Yeah, this will be addressed to Felix, I guess. The question is, can you go through your applications or use cases of DAOs in the work you have done? Dash itself is a DAO, so you can explain this.
Okay, let me maybe just show you. I think it's easy. For me, DAO is really a massive shift in how you can run organizations, and I tried to say it before. It's the first thing is, you don't involve with an organization. If I want to have a job, I don't apply somewhere. It's usually open systems. It's usually open boards in the internet you can engage. Of Dash Nexus. Can you guys still hear me? My headphones just dropped, I think.
Yeah, it's a bit laggy, but we can hear you.
Perfect.
No problem.
Okay. Okay, perfect. So this is Dash Nexus. This is essentially the Dash DAO. If you break it down, right, and it looks like, okay, what the hell is that, right? So let me guide you through. There is, if you go to the dashboard, you can see, in this month, 4,356 Dash. I think Dash today is somewhat around $130, $150 are distributed, right? So this is the money we essentially give out to people who apply for it. There's certain areas where you can put your proposal. The next cycle ends in 24 days. There is basically a 30-day cycle in Dash where this money is distributed. So you can go to the leaderboard and say, okay, what do people ask for money, right? So there's something we call Dash Incubator, and Dash Incubator is asking for 494 Dash from this 4,940 we are giving out. And people like this proposal. So people are voting for this proposal. The question is, who are the people who can vote? And in every DAO, you can design that in a certain way. In Dash, people who are voting for these proposals are called masternodes, and masternodes are people who are staking 1,000 Dash into a certain system. And then they are eligible to vote, to have one vote for each proposal you see there, right? And as you can see, 1,000 Dash at a price of $130 to $150 per Dash is some serious amount of money. You know, the reasoning behind we designed it that way was saying, hey, if you have really skin in the game and if you have a lot of money staked, you have a good interest in voting for something that really is pushing forward this form of organization. But again, there's completely many models how this is made. The modern concept with Uniswap staking is, you know, whatever you have staked, you proportionally have weight of votes. So if you have a lot of skin in the game, your vote counts more than others. Dash has designed it in a different system, one masternode, one vote. So in this case, 947 of the masternodes voted for this proposal. There is votes for and votes against the proposal. There is a payment cycle, and yeah, this is how it's done. So it's like very easy. It's a bit, you know, you have to get a bit into the touch and feel how that works. But you know what it does essentially enables you as one person or as a team who is wherever. Let's say you are in Africa, you're in Malaysia, you're gonna have a problem to apply for a job with a company in the US because you don't have the permission or the work permit or whatever. With this system, you can do it, and with this system, nobody can stop you doing it.